All right, good morning, everybody. Happy Thursday. Today is the 26th of May. We're going to take a look at Bitcoin and some other Forex pairs, see if we can't find a trade. Bitcoin's been doing nothing all week. Hang on, let me kill this phone. Bitcoin's been doing absolutely nothing all week long. We did have this ascending or descending wedge, I should say, building in on the 4-hour chart. It was attached to this swing high over here, but we did get a breakout on all time frames lower than the daily. So it did not have a close above on the daily, but every single time frame under it did. And then we got the move back down to support. I mean, it was just an instant candle straight down to support, right back up. Same scenario. Yesterday we traded sideways literally all day long. Just 1 hour ago, price started to break down. So I woke up to a big red candle, if you will. We did try to get long yesterday just to look for maybe that move to the upside being a fake out. But I mean, technically you have not broken above any resistance level. In fact, each time you make a new resistance level, that level has held, and now we're down here. So what looks like is happening is you are getting a little bit of follow through from this downside candle here. But technically, I look for that to play out like on the third day, not today. Like yesterday, we were kind of looking for it, but as long as it's holding support, I mean, you are seeing a ton of accumulation down here, but that does not mean price is going to go higher, and that's the problem. People, if there's a buyer for every seller. The markets are what you would say. Hang on a second. What is it? All right, never mind. Anyways, there's a buyer for every seller. So basically, price, the way candles will move is the aggressiveness of the sell side. So big monetary firms, not prop firms, but market making firms, I guess you can say, they're providing liquidity. So they're buying on one exchange, selling to another. And they're doing that 1,000 times per second. That provides the liquidity, and they're going to follow the spread to make money, but they're also going to follow price. So they're not directional bias. They are running a delta neutral strategy, meaning that they're only in it for the spread. They don't care if price goes up or price goes down. So they just, they provide the liquidity, and if there's more selling than buying that's continuously going on, the price is just going to keep going lower. But you are at support, and if you are bullish on this asset, if you think that this pattern, which is starting to look less and less like a descending triangle, more and more like a descending wedge. If you think this is going to break out bullish, you need to buy down here, not up here, because you're buying into resistance. Now, yesterday we took a trade based on the middle of the range right in here, and I will show you why. I am working on a video talking about volume profile, but let's just go ahead and throw it on the chart real quick so I can show you what I was looking at. This is yesterday. This is today's new daily range. But I was buying based on this right here. You can see that the point of control was trading at around $29,000, which is something to say. I mean, we know that support's down there. So each time you get support, you get a point of control down there. So people are buying the swing lows. So we'll see if they buy this one as well. We are looking for it to break out bullish because the pattern is suggestive of bullish price action. But that doesn't mean that we can't break out to the downside first. If you remember last week, the video I did on Saturday was discussing that I was looking for a purge lower, to drop lower, to liquidate everybody that's been buying these swing lows, then go up. So we'll see if that occurs, but this is the reason why I bought or was looking for buying entries yesterday. You can see that the point of control was setting up above support a little bit, and also we had this old resistance level right there. Price came right down into it, tagged it, got even a little bit lower into the point of control, and that's where it found near-term support. Now, I did take profits moving up into when we had the FOMC minutes yesterday, so we'll see what happens now. That position has been stopped out by the market. I did not close it. The market did. So I guess we're going to look for a new place to position for a new day trade. And basically what I'm seeing right now is the problem with getting it into a position right here is simple. We've been bearish on Bitcoin since $69,000. So to try to buy anything is ludicrous in my opinion. But we're not buying it because we think Bitcoin's going much higher. We're buying it in anticipation of the breakout of that. And in a downtrend, if you buy supports, you're technically going to be stopped out more often than if you just look for a high region to sell. See, that's the real trade. That's the trade I've been looking for, been waiting for. But if it wants to continue to play around like this, then we'll just give it its time. We are looking for a retest of monthly support, also a gap fill at 35K. And then we're going to look to sell that if resistance comes in there, because that, in my opinion, that would be a good spot to look to sell it. Let's go look to the monthly chart real quick, and we'll go over that briefly. So right here is that support level I am talking about. We get another test of that. Boom, down. The trend is down. So there is a lot of hubbub going on about Bitcoin having 8 red weeks. I did look on the BLX index. I did not see a spot where we ever had 8 red weeks before, but here was a point in time where we had 3, 4, 5, 6 red months in a row. So right now we're working on 2 months in a row red. So yeah, I mean, it does look bad on the weekly. It looks unprecedented to see a leg of price down like that without any bullish candle. But timing that bullish pop is going to be difficult. It does look like we are still at support, daily support, Q1, monthly, quarterly support. It's all still there, and that's where we're trading right now. But it does look like it's trying to break down. If I go here, let me do this real quick. So we're trading as an inside weekly range, meaning this is your weekly range here. Then we traded as a very tiny range inside week. And now this week we've traded as an even smaller, tinier inside weekly range. So this candle's inside of this candle and this candle's inside of this candle. We make money when price is trending. In order to trend, you must take out either the bullish high or the bearish low. And we are not doing that. This is called choppy price action. This will chop you apart. There is not much technical analysis that can help you when this is going on, because there isn't a lot of money. There's a lot of bullish money coming in, but it's not enough. I mean, obviously it's being sold into. So as the buys come in, the sellers are dumping into it. So you get this kind of sort of just sideways fluctuation that's not really helpful for anybody. You can trade this profitably. You can buy supports and you can sell resistance, and it's called range trading, right? You can absolutely do that. The ranges are not very big, but using leverage, you don't need a massive move to make money. You can get long at support and sell at a 2% gain as long as you're risking 1%. If you're risking 2%, then you need a 4% gain. Then you can exit that position and look to reload on the next one. That's how we make money in untrending conditions. So we'll go ahead and see if this support wants to hold again today. It looks to me like it's trying to break down. Right, you're making every swing high is getting lower, lower, lower. Yes, support is holding, but that downside pressure is going to eventually cause a liquidation run to the downside. Then we'll look for a new daily support down there. We'll look to get long and we'll target 35K. But right now there's nothing to do. I mean, just sell resistance, buy support, guys. Sell resistance by support. So the other day we were watching Euro USD and Euro Yen. The Euro Yen trade worked. The Euro USD did work, but it was the day after. So I'm getting that here recently. A last of the few trades that I have taken have played out like that, where I've been stopped out, and then the next day the move actually occurs. So you can see that we did get a stab lower yesterday. That's what we were looking for. It was a successful trade. We were watching resistance up here. So let me just mark hourly res real quick, and then we'll discuss the trade. Let me go back out here to the daily so you can see where daily resistance is. Right there's daily resistance. There's another daily resistance here. This candle's low has not been taken out yet, so you cannot consider that a trap. Therefore, that candle's resistance is legit. Go back into the higher time frames, and you can see how this played out. So a lot of volatility. This is the morning. This is where we took the trade. A lot of volatility coming in right around this area simply because you got your daily res up here. You got an old daily res up there. But that's how it works, guys. Simple, right? Sell resistance. New hourly resistance is there. Look at that beautiful, flawless test of it. Now, if you tried to buy or sell this resistance, you'd have got stopped out more than likely. So you can wait. If you wait for price to tag your level, enter there, you're going to have a lot better chance of making money on the entry instead of thinking to yourself that price is not going to test your level. It's just going to roll over. If it's a big level, it will be tested. Now, it was tested once here, so I could see why people would want to rush into this entry and buy it there. But when you have candles that are not closing above but wicking well above that resistance level, that's a pretty good indication that you're probably going to see a higher stab. Simply because when it's ready to go, when it touches the level that it wants, it goes. All right? Real quick if you're on the right side of the market or not. So let's put this into perspective. If you would have got short here, you'd have been setting from London session, 3 a.m., 4, 5, 6, 7. So you're looking at 4 hours of just setting in a stagnant position, looking like it's trying to break down, but this candle closed bullish, right? There's your target. This is the daily low, but price reversed here. So that becomes the target. Boom. Within 2 hours of taking that position, I was taking profits. Moving my stop to break even, and you can see that position is still going on. Euro USD, not so good. Let's go look at it. It did finally break down. We were looking for dollar to find support, and that's what it did right there. So let's go to the daily real quick. We were looking for this thing to find support on this day, simply because this was the big breakdown day. This was the day that closed below support. So if we were going to get a pop, it needed to come soon. We only got a 1 day stab out of that, and it was yesterday, so not good for me. But the next daily support is 198 cents, $100.98. The way this looks is, we'll see if support holds, but chances are it looks like it's wanting to go lower, which should be good for Bitcoin, right? As long as dollar's coming off, that gives risk assets, a chance to regain some of their losses, but you're not seeing that. Even though the dollar has been coming off, and this is a nice, it's a nice pullback. It's nothing spectacular. If you go out to the weekly, you're going to see we've had 2 weeks of bearish price action. That's literally nothing on a bullish chart. So this thing can find support pretty soon, and when it does, we are going to still be looking for bullish entries. So I'll stop being bullish. Well, pretty much we have closed below the daily 21 exponential moving average more than a couple days. So it's starting to look like it wants to go lower. If we take out this swing low down here at $100 even, I will no longer be bullish on the dollar. It will look more like it wants to be either sideways or choppy, but I think you're going to find support. I think you're going to go higher. There has been literally no change on the fundamentals of the market, all right? No change. So the trend has been to buy the dollar at support. We do have a newly formed support, and it may go back and test it today. This is going to be support 101, spot 76. You can watch the intraday charts to see if it finds support there. So if we're looking to find support on the dollar, looking to be buyers of the dollar, then that means we're going to sell the Euro USD to do that. Here is your daily time frame on the Euro. Nice big bounce. No level here to speak of for this thing to find resistance. It was an 8-hour level. I typically like it to find resistance or support at dailies. But, if you ain't got a daily, the next best thing is an 8-hour. Why the 8-hour? Because a lot of new subscribers are going to ask me. The answer to that is simple. The FX and crypto markets trade 24 hours a day. FX is 5 days a week, crypto 7 days a week. You have 3 sessions inside of a daily period. You have the Asian, London, and New York sessions. That's when the banks fire up over there. That's when business gets started. So that's why during the Asian session, that's the very first session of the daily range. Middle session will be your London Open, and then closing off the daily range is the New York session. This is why I wait to the New York session, because typically the New York session is going to show you your daily range expansion, because you've gotten the final piece to the puzzle being the New York Open, and that's the last majority of the volume that's going to be traded for that day. So the 8-hour chart is the next best thing to the daily. I like the daily better. Let me preface that. Definitely you want to look for these levels on the daily, but if you find an area of price where it's just straight down on the daily chart, there is no area, drop down to the 8-hour, chances are you're going to find that level. So right there is where price turned around. You can see that it is moving up right now. Since we looked at the 8-hour, found support off the 8-hour, we're going to continue to watch the 8-hour this morning. We're going to see if one spot 07075 holds as resistance. Now this will close at 9 a.m. Eastern Standard Time, so you cannot take this trade until after 9 o'clock, and that's getting a little bit late. So here's an hourly res. Maybe you don't have to wait till 9. An hourly closure above hourly res, which is a little bit lower, around 7053, would say that, yeah, you're probably not looking to short this. The order flow for the last few days is obviously bullish. Every swing low is getting bought. This was a swing low. Okay? This was a swing low. So it can technically go higher since the order flow is bullish. But in the longer term, dailies, weeklies, this thing is bearish. But here's the thing. Once you get above your 21 exponential moving average and above the 50, in my opinion, you can look for bullish entries on an asset. So you're looking for a higher low formation. So taking this short right now, you're only targeting today's low, tomorrow's low. Then you're taking profits as it moves lower. But there's a good opportunity or a good chance that this thing finds support eventually and starts to stab higher. And that's just because, it is what it is, right? You could throw a trend line on there if you wish, but, trend lines are so subjective. We haven't even tested it yet. So technically, you could still bounce, right? So it's up to you. Do not buy it up here. Absolutely not, because you're into resistance. You're looking to get long at support. Absolutely beautiful right there on the hourly oscillator. Boom. Oversold. Up. So, these oscillators can help, but just, they can also show you if you're buying in a good spot or not. So selling here technically isn't really a good idea either. But we'll watch to see if this level holds, simply because, we'll see. We'll see what happens. I only pay attention to the RSI on the daily. Those are typically my signals, but you can look at them to see if there's any divergences happening on the hourly. We'll see what happens. Dollar has been bearish for the last 2 weeks, so maybe it wants to go a little bit lower. Another trade we were looking at, pound yen, it's played out over here, but not so much lately. This thing has been chopping around sideways, wedging up. Whenever it's wedging up, it's very difficult to trade. You can see that it's not even, this resistance was formed. This day did not test that resistance. Same scenario here. New resistance, down day. We came up, we did not find resistance. We did today, well, not even really, right? Didn't even get up there. So, when it's wedging up, it's not really giving us any good technical signals to take any entries. Pound dollar coming into an obvious area of resistance. We're above the last 3 days. So if this thing's going to roll over, it can do it now. Just let me see what's going on. But you still have this swing high right there to liquidate. So maybe it wants to go higher. And there's no guarantee that it has, or I'm not saying that it has to go lower either. It's in a downtrend. So while things are trending to the downside, that's typically when you want to look for selling opportunities, is at swing highs. So let's see what happens after we take out this resistance, liquidate that swing high. If we get a bearish reaction, then maybe we can look for shorts on pound dollar. But anything closing above this swing high, an hourly even, would have me not looking too short. All right. So something like that. What we'd want to see is we'd want to see an hourly candle stab up there. But guess what? I mean, that's a good 40 pips away. So the move's already played out, in my opinion. But if you close an hourly above that, then we're probably going to look for higher prices in the next couple days. If you don't, then it'll probably roll over in the next couple days. Either way, we're going to keep this thing on watch. USD CAD chopping around. Dollar, it did break out and it did look like it wanted to be bullish. Let's get rid of that. But dollar weakness came back into the fold, and all week we've just been trading sideways. Clearly can see that we're bouncing off resistance. Bounce. So that would typically be a good spot to look for entries. Find your hourly res into that area first. So that's your daily there. We'll just use this one here. Got a nice, beautiful hourly res there. And also you have a supply zone right there. So I don't think you're going to get another opportunity on this, but if you do, you're going to be watching 1.28397. If you get higher than that, if you're up in here by 9 o'clock, this thing is bullish. You're probably not looking to short it. There's really no setup. Really nothing to do. Look at that. Bitcoin looks kind of like USD JPY. Big down move on yen. So that must have been yen strength. Popping there for a split second. Doesn't look like that on pound yen. Let's go look at Aussie yen. Nothing really. So that must have been just dollar weakness, not so much yen strength. These things are moving lower though. This thing is choppy too, man. Markets are choppy. I don't know exactly what they're waiting for. Notice you got the same wedging formation going on here. I do like Aussie yen lower. But here's the thing, I also like Aussie dollar higher. So if the dollar can be weak against certain currencies, but if it can also be strong against other currencies. So, Euro USD could be going lower, but Aussie dollar could be going higher. Aussie, for some reason this year, well, it's not for some reason, but this year in risk-off environment, Aussie got caught a bid. This asset usually gets sold off hard during risk-off environments, but what transpired is stagflation. So stagflation caused this thing to catch a bullish bid. So we have to keep that, that scenario locked up here. We do have a clear move higher, but a longer-term downtrend. So I'll leave it up to you. You have gotten above the 21 exponential moving average, so technically, you can look for bullish entries after it finds support. It does look like it's faltering to me. Looks like it's running out of steam. So I want to see a daily close above this daily resistance level before I start looking for bullish entries on it. But 071096 could still be a selling opportunity. Simple because you got above the 21 here. So that brought in a lot of new algorithms to start looking to buy swing lows because you're above the 21. You're above the 50 on the RSI. No, you're not above it. My bad. You're right at it. I thought if you would be over it, you're over the 21. I thought you'd be over the 50. Right at it. So the best opportunity I see on Aussie dollar right now is a selling opportunity. So we'll watch 0.71096. We're not getting any bullish momentum away from the moving average. That's, same scenario with Bitcoin. You break out of the suggestive bullish formation, but you don't get any bullish momentum. You start looking towards the other way. So we're not getting any bullish breakout momentum occurring on Aussie dollar. I actually like this one better for now as a sell, but I am overall more bullish on Aussie than I am any other currency except the dollar. I'm most bullish on the dollar, but then my second asset to be bullish on is Aussie because of the overall market, overall fundamental reasons. Aussie has a lot of futures products and some futures assets were smoking high. So let's watch this as resistance today. 071096. I don't like this because you obviously got a nice move lower and that was immediately halted. So we'll watch it. We're not going to take it. This is a daily resistance level. You obviously have two resistance levels on the hourly to watch instead. I like the highest one. You're bullish on the day. Barely. Right here is your daily open. So you're barely bullish on the day. Very small daily range. There's today's high. There's today's low. Very small range indeed. But we'll watch to see if this thing catches resistance. If it does, I like it near term to the downside. Just because it doesn't have any bullish momentum getting above that 21. That's technically a time to be bullish. Well, that's how we trade over here. We like to get bullish once we've gotten above that on the daily. Swiss yen was rocking and rolling to the moon. Then it had a nice pullback. So it looks like price is just kind of dead cat bouncing at the moment. But you're back above the 21. I mean, anytime you get back above that, you have to basically, we're in like one of those areas where it's like price can go either way. And technically it can do that anytime, anyways, no matter where it is, no matter what indicator you're looking at. Especially if it's going to be a choppy market, selling may go away. So that's why we're not seeing a whole lot of volatility. But it looks like it's petering out as well. But you're still closing dailies above that. So here's my scenario on Swiss yen. If you close today below support, then you can look for another test lower of a next support zone of around 131.281. If we close back above this level today, I will be targeting swing highs tomorrow. All right. And that's pretty much it. Let's go look at currency futures real quick. Just get a look at Canadian dollar. It's just choppy and sideways. It's not really uber bullish. This is the daily time frame. So you can see like longer term, this thing is just chopping back and forth like it always does. You are into resistance, but once again, you're closing above the 21. So you have to put more weight on CAD strength right now if you're trading anything. So dollar is below the 21, CAD's above, USD CAD, looking for near-term shorts. It's as simple as that. And you are at an area where we can look to trade. So the best two pairs I see on the day for shorts, USD CAD and Aussie dollar. Good morning, everybody. Sell house for ETH? No, absolutely not. Do not do anything stupid like that, please. If you got $20 and you want to buy ETH, go ahead and do that. But do not sell your house to buy ETH. The bear market is not over. You're just getting started, guys. I have to say this over and over again because people don't understand, I guess. They think that this is the bottom. I mean, there is data that suggests that we are looking for a near-term bounce, but it doesn't mean the bottom is in. All right? Does not mean the bottom is in yet. But here we are into big areas on the 10-year. This asset usually goes in one direction only, down. It gets sold at swing highs. Then you get your expansion to the downside. Massive volatility in this asset for the last couple years. But you are testing the top edges of resistance. So we're getting close. We're getting data that says that's suggestive of a bounce. 2-year, 5-year. Junk bonds getting crushed, right? So we'll see. But right now, it's not the time to be bullish. The backdrop is not supported by anything that's even suggestive of bullishness right now. Remember, the Fed is hiking interest rates. Interest rate hikes is typically not good for risk assets. We're looking to be a buyer here, down here in the green zone. And we're not going to be a buyer as soon as it gets in the green zone. We're just going to start buying it when it gets in the green zone. You still have a ways to go before you're in the undervalued regions. Last time I pulled this indicator up, someone suggested that because it's making higher lows in the green region, it will get front ran this time. That has not been the trend. Stick to the trend. It is your friend. We will wait to become buyers when Bitcoin is undervalued. It is cheaper than it was, but it is still not undervalued. But people are buying it. I mean, people are buying it. Look at all this. Another trend score of 1 the other day. So that's probably a good 5 ones. So, wait a minute. What just happened? The last one I was on said 1. Whatever. A lot of ones. I mean, people are buying. That's accumulation. You can see it on other things too. Here's short liquidations, not doing much. Obviously, shorts are making money right now, or they were making money. Futures long liquidations. It hasn't done anything, so there's not much liquidations, and you're not built. The open interest is still high, but it's not high enough. Well, I guess 12 billion is a lot. So yeah, I mean, at 12 billion, you could definitely see a move. Yeah, and my chances are that these are all longs, right? These probably are all this open interest that's coming in is longs. We can see it on the trend score. We know that the Binance longs. I don't know that ticker symbol, but you guys, you've seen it all over Twitter, right? The longs are just absolutely massive right now, but it doesn't necessarily mean that they're leveraged. That's the key. You want leveraged longs. Lots of leveraged longs could induce a short squeeze. Not a short squeeze, excuse me, a long squeeze. Crush them longs, get them out of there. Whenever the market gets highly leveraged, that's typically when you see a big move. People are buying, but you can see that it isn't doing anything. It's not trending in one direction or the other. It's been stalled out for a couple weeks. And we know Bitcoin can do this because up here it traded in a range for a long time. This range was better though because it was big. There was money to be made inside of that one. There's money to be made inside of this one, right? There's money to be made. I've made 3 trades this week, 2 during the weekend, and all of them were winners. I mean, you can make money in this. Big thank you, Boss Heath, for who he is making us. You've actually given a lot of family, means, and livelihood. Thanks. You're welcome, my friend. You are welcome. Just trying to show people what to look for. If they're going to do this, they should do it looking at the right things and not, what's being sold out there. A lot of what's being sold is terrible information. And this information is free. And it's better. Good mornings. Good morning, Aaron. Good morning, Michelle. Hello. Priest of Crypto. Good morning. Oh, we'll go look at ETH. Let's go look at it. I know you're not being serious, but we'll go look at it. It looks a lot like Bitcoin, but it's got an expansion. So this is nice on ETH. You're not trading as an inside week anymore. You're actually showing downside pressure. So ETH looks like it's trying to liquidate this swing low, right? Once that occurs, oh, look at that. ETH didn't liquidate its yearly range open though. So just because of the way it is situated, ETH is stronger than Bitcoin. Bitcoin's already tested its January 21 lows. Well, not the low, or did it take out the yearly low? ETH has not. ETH has not. ETH's got a long ways to go before. So Ethereum looks bullish on the yearly chart. It's not. It's in a bear market, the same as everything else, but it's definitely looks stronger. Let's see what it's doing. It's moving lower today. Yeah, I mean, this is the bearish target. It doesn't mean it'll get hit, but that's what the market is stretching for. I'd say that's where, think about it. If we know everybody's buying in Bitcoin right now because this is the low forever, you're never going to get to buy Bitcoin again at that price, according to everybody on Twitter. So now you got retail rushing in to buy, and they're not. It's not undervalued yet. It's not, and that indicator uses realized cap and market cap to make that oscillation. So even professionals that look at those things, they're not buying yet because it's not undervalued yet. Just wait for it to get there. It will get there. You're in a bear market across the board. Almost every asset on earth is off. The SPX isn't at bear market yet, but it's another couple weeks and it'll be in one. But here it is. There's the swing low. Looks like you're taking out support today. Once you take out this swing low, then maybe you can look for a bounce on ETH. Let's see what happens when it capitulates that swing low first. Now, a daily close below will not have me looking for longs, but a wick down under this swing low, and then maybe you can look to get long. But I mean, you're buying a downtrend, right? You're trying to pick a bottom, which is not good. It's just not. The best thing to do is sell resistance. But it's, it's been coming off for a long time, man. Long time. Let's see how much ETH is off of its. Is that even all-time high? That's all-time high. Let's just get a rough estimate. You're down 62%. So same as Bitcoin, right? Down 60%. It looks exactly the same. It looks a lot weaker than Bitcoin today. Could be suggestive of Bitcoin looking for support. So we'll, let's see what happens. We'll see if it finds intraday resistance. I don't think I'll take a short here because I'm into support. You do not short into support. You don't go long into resistance. So, I mean, it's one of those things. See if it holds resistance, can't get above something, then maybe target today's low. If ETH is suggesting what's going to happen to Bitcoin, because it's had a lot bigger of a down day. Was going to ask for a video on volume profile. Yeah, I'm working on it. I'm trying to put it together with all the relevant information, just the pertinent information that you should know. None of that stupid, useless garbage like drawing shapes on the volume profile. I mean, come on. But anyways, all the relevant, pertinent information that I think is needed, I will put in the video and we'll go from there. It's the tool. It's the most important tool, in my opinion, in the entirety of trading. If you're going to be a day trader, you need to know how to use volume profile the right way. I mean, volume profile shows you the price that people are looking at or trading at. And, if you're looking for a range expansion, best place to look to get involved is where everybody else is. It's the same thing as any indicator, though. It's not the holy grail. It's not going to make you, a successful trader. There's a lot more involved in trading than just having a decent strategy. There's a lot more involved with it. You got to be patient. You got to be disciplined. You got to have self-control. You got to know how to manage your money. You got to be consistent in the way you take entries. There's a lot goes into making a consistently profitable trader. It's not just the strategy. Strategy freaking helps, though. I can tell you that right now. Strategy helps. If you can get your equity curve turning around by yourself, there's nothing in the world that can stop you. And for people that are broke also, please understand this. If you can show consistent, profitable gains with real money, it doesn't have to be a lot of money. If it's a lot of money to you, that's good. But you can take that info to any prop firm in the world and they'll give you money. You don't have to be rich to get into trading. You can absolutely get prop money. So learning the skill is definitely a plus in my book. Definitely a plus. I mean, what's not to like about it? Work from home, work anywhere in the world as long as you got an internet connection. That's why I wanted to learn. Wicks get filled, bro. I don't know what you mean by that, Dane Moose. If you want to elaborate, wicks get filled, bro, then we'll go from there. Yep, that wick is the target. It's my target. This is probably somebody else's too. Any idea what the daily DXY support would be on the euro? I do not. The daily dollar support, we were watching that to see if it wants to hold as resistance. It didn't. You're bullish on the day. You're 0.33%. So I mean, it can roll over here now, but the problem is you have such a big strong bullish candle that in order to confirm this a trap, you would have to get all the way back down to there. And there's some pippage inside of that candle. So I'm not going to, there's 30 pips in that 1 hourly candle. I'm not looking to go short this now. Absolutely not. That's right there. What I'm looking for is 30 pips. And it just did it in the span of 1 hour. That's a move. That's a big move. So probably not going to be bearish on this today. We'll let it find resistance again. It will maybe not find resistance. Maybe it wants to continue higher. Maybe the dollar wants to come off. Maybe risk assets want to get long again, which is why we're kind of looking for Bitcoin to liquidate everybody. Then we'll probably see that trend change to the upside for a couple weeks. The dollar and Bitcoin have not been trading together. They haven't been trading opposite either. The dollar's been, I've seen Bitcoin close bullish days with the dollar closing bullish days, and I've seen it close bearish days together. So, typically they do not completely like 100% inverse correlation there, but if the dollar's bullish on the day, then you're looking for shorts on Bitcoin. But, dollar's bearish today, so is Bitcoin. So it's that opposing correlation is no longer there. So I don't know if that means that there's a possible trend change coming. Look, we know there is, right? We know there is. Let's go over here and look at this chart. This is all of your assets. This is calculated using where all the stocks are in relation to their 200-day moving average. And you can see typically, this is the 08 crash, but all of these swing lows have been fantastic places to look for a trend change. And we're down there, right? We're down there. So if anything, you can look for that snap back, or that move back to the 200 moving average. Now, the 200 may act as resistance if it gets back up there, but we'll sell it then, right? Then we'll sell it. But looking for shorts where the market is right now is not smart. It's just not, because we are extended to the downside. You can still look for intraday shorts, but you're not looking for, for deep continuation. You're not looking for the world to crash. In fact, I have actually started buying a few assets here this week, just picking up a couple shares, adding to my existing portfolio, because this is big, right? We need a pullback on a lot of these things. A lot of these things are busted, man. Netflix is off over 80% or 70%. They'll get their shit together. 73%. They'll get their shit together. Look at this asset, man. Now, the thing about it is Netflix has got a lot of competition now. It didn't have competition back here. Netflix was the only streaming platform minus Amazon Plus or Amazon whatever, Prime. So, but now you got Disney Plus, you don't got CNBC Plus anymore. But you got a lot. They got a lot of competition, and a lot of their content is woke, and people don't like woke content. They don't like to be teached that they're racists, right? I don't like to be called a racism either. So people don't like that stuff. And boom, down. But they'll get their shit together, and their stock will be moving up again. It's a good investment. 70% off. Are you going to be down? Yeah, probably for a little while, but these things are going to bounce. SPY, 1, 2, 3, 4, 5, 6, 7, 8 weekly candles in a row to the downside. We're a bit extended, right? You didn't even get 8 candles to the downside in the March 2020 sell-off pandemic. Now, the range is obviously not nearly as big as these candles, but still, that speaks volumes of what is actually transpiring. We are seeing downside, but we're getting into an area of support. So we don't want to look to be sellers at support. We want to look to be buyers. So we're waiting for Bitcoin to liquidate. I don't even think Bitcoin needs to go to this wick, right? ETH is looking for its downside wick because it's so much closer, right? You're already below last week's lows on ETH. So on ETH, this wick low, this Luna low is what I'm calling it. The Luna low, ETH's looking for it right now. Like, I could see ETH hitting it today or tomorrow. But on Bitcoin, that's a fair stretch. That's a pretty big move. If you go look at it on the daily, I mean, that's a pretty big move to the downside. A couple $1,000. Big move. So I'm not looking for that. What I'm looking for is just a stab lower, get a nice daily close below support, and then maybe trade sideways for a day or two and then start to go back up. Right? Just liquidate the near term, these people right here that's been picking this as the bottom. Liquidate those people. But nothing says it has to go there. Nothing says it has to go there. We do have a descending triangle or a descending wedge, and those typically break out to the upside, but they can break down first, liquidate the longs, then go and break out. Like a Wyckoff spring, if you will. That's kind of what I'm looking for, but it doesn't mean it will play out. It doesn't have to play out, and it might not play out. I do not have a crystal ball, but I will look to be a buyer at supports if support's holding. I looked to be a buyer yesterday. Support held, boom, bullish up. That's where we were looking for our entries. And also, if you notice, that was the low of day yesterday. So if you're looking for a long at the low of day is not a bad place to do it, right? You definitely don't want to get long at the high of day. If you're looking to get long, low of day, or the midpoint, fantastic places to do it. Amazon. Let's go look at Amazon. Amazon got slaughtered as well. Here, let's do it like this. There it is. So that just screwed everything up, didn't it? It did. That's okay. I'll put this down here. All right, Amazon. Amazon's off much. Damn, man, they got crushed. See, even good earnings, though, can get sold into in a downtrend. It's off a lot, and we know Amazon's trying to take over the world, so, it's not down as much as other assets. You're only off 43% right now on Amazon, so there might be a little bit more room to go. Looks like there's an incoming split on Amazon. 20-1 split, June the 6th. Keep that in mind. That's not long. You're 10 days out. 20-1 split. Nice. This thing's going to be trading for... Nice. It'll be cheap. It doesn't matter how much it is, but... It looks like it's at support. I mean, I don't see any weekly support. I mean, technically there's one, but I don't like using old levels. But there's nothing in there. So, I mean, right now you're just going to watch last week's close. And obviously last week's low. Was last week's low liquidated? No, it was not. What is the low? 25.20. What is this? 25.20. So, all right. You got an exact low on the last 2 weeks. 20, 25, spot 20. 20, 25, spot 20 for both of those swing lows. And you're seeing a bounce. So this is probably where I'd be looking for any bullish opportunities. Looks like yesterday was that opportunity. So wait for a pullback down to 2082. 2082. If that level holds, then you're going to look for bullish pops. But remember, you're not doing this with a lot of money because it can continue lower. 100%. They can continue lower. There's your daily res is going to be up there at 2,300. But, I mean, I think that's the level I'd be watching. Right there. 2082. That would be my line in the sand. Daily close below. And then I would wait and see what happens after the weekly low gets liquidated. That doesn't make any damn sense to me at all. What is going on? See, that's clearly the same low, but on the daily there isn't. What the F? Whatever. Thanks, TradingView. Get your shit together, man. If the weeklies has 2 wick lows, then 2 weeks in a row have the same low end price, but you don't have it on the daily chart. Now, I understand that these things are closing the market, but still, if you got it on the weekly, it should be there on the daily. Have you heard about EXO charts? No, I haven't. I mean, there's tons of indicators and stuff out there, tons of charting softwares and platforms and stuff, brokerages. I haven't. I pay attention to what I trade because it works. I use TD Ameritrade for stocks and options. I use Forex.com and Oanda for Forex. I use KuCoin and Coinbase for crypto. KuCoin's my main trading platform. I use Coinbase to accumulate. I wonder what accumulation technically means. The ratio of long-term hodlers, buy versus traders, makers, and short-term players. Accumulation means buying. People are buying the supply. Whatever supply is in the market, accumulation means people are buying it or trying to, right? Distribution is when the majority of people are selling. So like Amazon has been in a distribution phase for weeks, not an accumulation phase. An accumulation phase, typically you get a bullish reaction afterwards. But you can see that, volatility is big. So even though this was an accumulation phase on Amazon, you did get a bullish expansion, but a couple weeks later you came through, liquidated that, then went. So this is kind of sort of what I'm looking for on Bitcoin. I'm looking for the accumulation phase, then I'm looking for that liquidation and the spring, the Wyckoff accumulation phase. It doesn't mean it's going to happen, obviously, but that's what I'm looking for. If it wants to continue to go lower, it's fine. It'll just go without me. I am not in a short position. I closed out that position when my target of 26K was hit. But it just means people are buying it. You could probably Google accumulation and get the exact definition. But I mean, the ratio of long-term holders versus traders and stuff like that, don't even worry about that. Holders do not move price. All right? Supply and demand moves price. If all you have in an asset is holding, then you probably won't have any market makers in there offering a spread. So you're probably just going to see a tick, tick, tick each day that goes by. No actual price movement. You got to have fresh buyers to make an asset go up. If the sellers are exhausting all of the demand, then price will go lower, and vice versa. If demand is exhausting the sell side or the supply, then price will go higher. Right now, the trend is lower, but it has been a downtrend since October of last year. And we've been crushing it. It's a bit extended now. In bear markets, typically that's what happens. You get big moves to the downside, then you get a whole long time of nothing but sideways and boring price action, capitulation, and then boom, you go back into an accumulation phase. We're just not there yet. When Bitcoin is undervalued, then you're going to see a real accumulation phase transpire, in my opinion. Like I said, big numbers are coming up. You got CPI next. Next CPI number is going to be huge because the last CPI was lower. We're going to keep an eye on that. If they start coming in lower and lower, then you're going to see a lot of risk assets perk up. That's the main driver of why I'm looking for a bounce. It has nothing to do with price action. I mean, technically, this thing's seen its move. It has played out to the downside, right? Everything that I've been talking about since we were trading up in here has transpired. Here we are. We're at the precipice. You have an absolute perfect measured move to the downside. This is your main expansion leg with this consolidation, and lower, it's an absolute flawless measured move. 6 months into the bear market, few other technical reasons. However, the CPI number is what's important, because if inflation stops trending up, then that is good. That is very, very good news. Since we have 2 jobs for every 1 unemployed person right now, the Fed is going to use that and tighten. They're going to tighten. So risk assets might have already priced in that initial tightening. If the inflation rate stops going up, it will begin to look attractive again for buying these assets. So next month, and then in my opinion, the month after that, CPI prints are crucial. Crucial. We stopped moving higher. Now we might have plateaued. Last one was lower. It did not meet expectations, but it's still lower than last month's, which is the first time we've seen that since the trend started. So if the next 2 months are lower still, or lower than the one we just got, you're going to see a lot of risk assets start to move to the upside again, because people will start to redeploy that capital. With markets, it's cyclical. Capital, all of it's cyclical. You have bear markets, you have bull markets. It's cyclical. Bitcoin is no different. Bitcoin is no different. So we'll wait for it to become undervalued. Then we'll look to start adding to our spot positions. And then especially if the CPI print starts to trend lower and inflation starts to get down, Fed's fund rate gets up to 2%, investors will come flooding back into the market. 100%. Inflation is the most important and dangerous thing. That is what caused the bear market. So we need to get that under control. If you buy below 86%, can win most situations. If you buy below, I don't know what you mean. Again, if you buy below 86%, you can win most situations. I'll take your word for it. OTC not included. I don't love the accumulation thing because I don't know when it is, what it is. It called highs so far. Oh, no, Iman. Oh, you're talking about this, the accumulation trend score. What this is it takes data from all exchanges that handle Bitcoin. This indicator takes that data. So this is what is occurring on exchange. It's not falsities or anything like that. And remember what I said, just because people are buying, it does not mean price is going to go up. It does not mean price is going to go up. It doesn't. It just means that people are buying. And yes, 100%, it called the highs because retail loves to buy highs. Retail loves to buy highs. So as they're accumulating, retail is, these people that bought down here are distributing to them. So these people are buying these people's stuff. That's why, boom, down. Because all of the demand was exhausted by the intense selling that took place. Because there's a buyer for every seller. It's a zero-sum game. So price moves from other reasons. It doesn't matter that people are buying down here. But look here. This is your capitulation move, or it's not really a capitulation move. It was a pandemic. All right. It was a pandemic. And you had a ton of accumulation going in through here. Then you had the spike, more buying. And that started the bull market phase. Right? That started the bull market phase. But yes, retail loves to buy highs. The reason I like this better, this accumulation here, is because it is occurring at the lows instead of at the highs. We here on this channel, we were calling all of this, what you've seen happen over the last 6 months. We were talking about it when we were here. I was telling people, if you own Bitcoin above 50 grand, you really need to start thinking about closing that position like soon. And then boom. So people were still accumulating Bitcoin because they were still in the hype phase. This thing made new all-time highs. So when an asset's making brand new all-time highs, people are going to be buying it. It's the fundamentals of the market. When retail starts to get interested about an asset, it's time to get out, essentially. But now we're seeing accumulation happen at the lows. So at least these people that are buying smarter than these people, right? Because we have had that extension to the downside. We've had that downside expansion, an absolute perfect measured move. So a lot of people are looking at this as the lows, and even if they think that it's not the lows, they're still willing to buy it here, because if they think about this asset the same way that I do. In 10 years from now, Bitcoin is never going to see 20 grand again, because every 4 years the supply gets cut in half. The code, the way Bitcoin is designed, it's designed to go up over time, just to keep going up and have 4-year cycles all the time, right? Until you get completely shut down. And then once that occurs, then each Bitcoin just goes down in size, makes it go higher. The price should go higher on Bitcoin forever and ever, unless there's some fundamental terrible reason inside the code or something like that. You know what I mean? But as long as it keeps doing what it's built to do, then this thing's going to be worth millions of dollars per coin one day. So that's why people love it. That's why you have so many people interested in Bitcoin. So these people are buying, expecting this to be the lows, but we're looking for it to become undervalued with the realized and market cap together. Realized cap, market cap. Once that gets into an area that that shows that it's undervalued, then we'll become buyers. And we'll look for that bullish market cycle to happen again. Next halving is 2024. So there's a lot of time from now to then. Don't get chopped up in all the chop, right? If you want to buy Bitcoin where it currently is, I think it's safe. But I am still looking for more downside. But you can still add to your spot account down here. Because, I don't think this is the low. But I don't know either. I can't predict that. What if this does end up being the low? What if we trade sideways for the rest of this year and into next year, and then at the beginning of 2024, we just start to go higher and higher and higher? Then this will be the low, right? So, I mean, you have to weigh out what you think is a good decision, what is a good investment or not. Bitcoin is almost undervalued, so I'm going to wait for it to be undervalued. But I own Bitcoin much cheaper. Right, I own it way down into $3,000, $4,000, $5,000, $6,000. So that's where the majority of my position is sitting. Yes, I did buy a little bit on the way up, but not enough to essentially destroy my cost basis on the spot market. So even buying here for me is going to mess up my cost basis. I would rather hold it at lower, but I want more. So I trade it with the inverse swap contract. That's why I'm paid in Bitcoin. I can use Forex and stock to get paid fiat, to basically pay my bills and stuff. But when I'm trading on Bitcoin, I'm not converting that Bitcoin back to dollars. All of that Bitcoin, when the account gets bigger and bigger and it just gets to the point where I no longer trust the amount on the exchange, I will go dump it all into my cold storage, right? Into the spot. So I'm just basically... And I'll do that probably when we get down into the undervalued regions. And we've been trading in the undervalued regions for a couple of weeks. I'll probably empty out my KuCoin account and I'll drop it into the spot account. We'll go from there, and I'll just start doing it all over again. Just keep trading my way into owning as many Bitcoin as I can. I use the other, like I said, the other accounts are good for paying my bills and stuff. So this is why I trade Forex and stocks. I just love Bitcoin. I'm not a maximalist, and I don't care to short it. But I absolutely love it, and I want as many of them as I can get. Just in case this thing wants to rock and roll to 1 million. Does that, I can retire. But that's the purpose. That's why people are accumulating here. So it just takes time. You'll start to understand the way this stuff works. He's checked Bitcoin Pitchfork taken from 2021 April high with November 2021 high and July 2021 low. So you just said from 2021 high. So that's going to be here. And then you said what? This low down here. January 24. No, you said April high with November high. All right, let's do it like this. April high. All right, so you're starting there. And then I'm going to have to wrap it up. All right, what was the next one? November. Oh, that's not a damn pitchfork. So November. And then what was the low? July. Looks good, man. Yeah, I like it. Look at that. Good work. And it's even legit. I mean, boom, boom, boom. Yeah, you can leave it on the chart if you wish. So this is basically where you're looking for, you know, until it finds a market, until it finds a bottom, which will probably be, you know, 24 to 22,000. I mean, that's just speculation. It's 100% speculation, but I like that. This thing caught the lows twice. Bing, bing, beautiful. And it encompasses all of the highs. Absolutely perfection. As long as you're not looking for these lows down in here, I think you're going to be good. But at the same time, who knows what can happen? We know there's a big, massive yearly support at $13,000, but we're not expecting a $13,000 Bitcoin. Bitcoin has never retested an old all-time high. That's because of the halving. Okay, so in theory, every time you have a halving, your old all-time high should remain the old all-time high. You should never even go back for a retest. But, you know, with diminishing returns and all that stuff, then maybe it does. But we're not far from the old all-time high. The old all-time high is $19,800 and something dollars, roughly in here. So, yeah, we're looking for it to be undervalued around 25 to 22K. That's where we're going to be a buyer. One more leg lower, and we'll start picking some up for the spot account. Not a lot, because we don't want to destroy cost basis. We just want to start adding. But that's a good pitchfork. I like it. Nice work. Definitely holding those lows there. So yeah, you know, another stab down into that would even be better, right? Beautiful place. All right, guys, you have a fantastic day. I went a little bit over, 15 minutes over. That's okay. If you have any questions or need anything, just drop them down in the comment section below as I read every single question, and I will answer them for you. Make sure you guys trade safe. Make sure you trade smart. And as always, happy trading, everybody.